What's up YouTube, it's Louis here bringing you today's cryptocurrency video on Elrond. So I wish you all had a happy new year. I definitely did, but I'm still recovering. And that's why I was only able to make a video today for you guys. So on the weekly time frame, it's looking all good. Let's go to the monthly quickly, sorry. So on the monthly, you do have a bearish engulfing, but as long as we can hold this significant key fib level, the 382, we won't see further downside. Of course, this is very negative to see, and so what should follow is another red month, but I would like to see this swing high hold and this 050 if you were to roll over more. Now if you go and watch my Bitcoin update, there's multiple bullish patterns on Bitcoin, and this is why I think we will see continuation this year of the bull run. But if Bitcoin's looking bullish, then of course, no matter how bearish this chart looks, if Bitcoin goes up, it will drag this chart with it. So you are holding that 382 very nicely. You can see that we're in and out between this 20 EMA. But as for me, as long as you're holding this support, you can see support, support, support. As long as you're holding this 382, we won't see further downside. And on the monthly time frame, we've just gone through how if you were to roll over more, you'd come to that 050. And you can see on the weekly time frame, acting as confluence is that 55 weekly EMA sitting on that 050. So if we were to come down and lose that 382 right now here, we should wick down to here basically, but you might not need to because you're actually holding this previous swing high as support exactly right now, exactly for these past few weeks. So I'm going to get that level drawn in for you guys. You can see you broke under, got back above instantly, confirmed that support, confirmed that support again. You come up very impulsively, and that's why we have a nasty drop, because we were coming up quite vertically, as you can see if I zoom in more. That's why I've had this nasty drop to key significant support levels, which is that 20 EMA, which you want to see hold for continuation. But you can see also that even though you fell below the 20 EMA, you are still holding these key levels, that 382 slash this swing high. So I'm going to draw that out as a box for you guys. So as long as we're above this, we won't see further downside. That is my point. So let's go to the daily time frame now. I did have some fibs, so I'm going to get that out for you in a second, but we can see that we're forming some sort of double bottom here. One bottom, two. You just come down again, maybe to form another double bottom in this second leg. So one bottom, boom, neckline, second leg, and then go up like that. But in this second leg, you're also forming a double bottom, and this is normal, guys, because you can say out of this whole double bottom, that's going to end up something like that. You can see that there's in the first leg a double bottom, and in the second leg we're forming some sort of double bottom. So whenever you see double bottoms, there's usually double bottoms inside the double bottoms. That's what I'm trying to get at today. But you're holding this level very nicely. Some people are going to argue this is some sort of descending triangle. Of course it can be, and we don't even need to get the technical target because we already know what that technical target is, that weekly 55 EMA slash the 050. We're just looking at those fib levels. So of course I understand that point, but equally, if we break the resistance point of it like this, break out of this now, confirm it as support and head up, then we won't see that further downside. It's all about holding this support basically. If you lose the support, we know where we're going. Break the resistance, you're coming minimal to that 236, that $314, which would break you back above both of these significant EMAs to continue this bull market, where we'd potentially form a bullish cross and obviously break them all-time highs, sitting roughly at $560. So let's zoom in on the 4 hour right now. I do have these lines over here as two potential scenarios, but I just didn't make a video for you guys. This was already on the chart previously. So I'm going to turn this fib back on and I'll show you why. So this 786 is here and we're holding that. Of course we didn't want to come to that 786, but you can come to it after coming down correctively. So we've come down correcting after this impulsive wave correction phase before continuation. This is what we should see if the fibs are to be used as a retracement tool. If you were to now lose this 786, this is why I have this arrow here, you will come to the one minimal, and that's why I've just put it there, because I do think that you could double bottom here just like what we're talking about right now, but that's only if you lose that 786. The double bottom is still valid because right now you're using this as a base very nicely. So as long as 786 holds, you are potentially forming some double bottom where the neckline would be in and around the one, so $280. Once we're above 280, then of course we're amazing for continuation, and that's why I've drawn this line over here, because if we can get above this 618 now and confirm that support, you'll be breaking above both 4 hour EMAs. and so that's why we should see a pump to the 0 point, which is your previous high basically. And you can see there that is forming your double bottom like that. So that is what I'm seeing right now for Elrond. Lose the 786, we will continue to the 1, where if you were to lose that 1, you do have a target at 195. But you'd, yeah, sort of be in free fall mode, wouldn't you? So that's why you could potentially come to these 2 targets where that 050 is. But if you weren't to go to this 050, it's because you wick down and get straight back above, confirming it as support and heading higher, like a little market manipulation, a little fake out to trick you guys. Yeah, we're going into a bear market and then absolutely out of nowhere shoot back up, meaning that whole move was a fake out, confirming it as support, and then we head back up. So we're only going to see that if you lose that 786 and the 1, but until then you're holding key support, key Fibonacci levels, and so because of that you should head minimal to this 618. If we do get rejected by the double brick wall, then yeah, we're going to lose the 20 and we should make a lower low because you're respecting that double brick wall, so you should continue your downtrend. But even if you do get rejected, as long as you're printing higher lows above this, then we may not even come to the 1, as long as you're print. So you could come all the way down to here, then get back above. Basically, that's what I'm trying to get at. And also you can see that, yeah, this double bottom over here, smaller one bottom 2. So I'll get you a technical target out of that right now. So let's do that. So from the bodies back to the top, the neckline, put down the break. So that would be a technical target, which is, let's draw that neckline quickly again. There you go. So yeah, technical target sitting at this previous swing high, roughly at $266. So we're finding multiple ways of how we're going to get back to the top. Let's see if this is some sort of falling wedge as well. Yeah, so your technical target out of a falling wedge is the top of the wedge. So we're finding all the patterns basically that are going to send us back up. So guys, I hope you enjoyed this video. I'll catch you in the next one, and as always,